With the Investing News Network, I'm Scott Tibbles, and today I'm having a chat with Remi Piet, who is Senior Director at America's Market Intelligence. Good to chat with you, Remi.
It's a pleasure, Scott.
So, in the coming few days, there is going to be an election. It's going to be held in Guyana. They're going to be deciding who is going to be leading their country after March 2. So, the incumbent president, David Granger, lost a vote of no confidence way back in 2018, but he's managed to hold on to power for more than a year after that. The situation in the country is very interesting, which we've spoken about at great length before. So Guyana is a Caribbean country located in South America. It's split demographically, which is an interesting mix, and interestingly for us, they've got a lot of oil potential happening there. So in the past, you've said that it has the potential to become the next Qatar of the world. There could be a lot of money coming into their pockets, which is interesting for a country that is one of the more undeveloped in that part of the world. So, an election in a few days, just to date this chat. How can you update us on the situation, Remi?
Yeah, I mean, definitely is a very important elections, especially because of the capacity of the country to turn into a very large oil-producing power, and in a country which is right now, by all criteria, actually one of the most underdeveloped countries in the region, and as a result, whoever wins the elections on Monday, March 2nd, since Exxon has started producing oil only a few months ago, will be actually at the helm of the country and be able to manage fiscal revenues that the country has never experienced in its history. And as a result, whoever wins that election is likely to be able to manage those resources and try to maintain power in a country where the history has been from dominance of one side of the political equation for a series of terms, and then another. We've seen a democratic transition in 2015, when President Granger took over from the PPP rule in the country for a few decades, but the situation is still very unstable, and institutions in Guyana are definitely not to the level of a country that potentially could attract a very high level of investment. When I say potentially, actually, the investments have more than doubled last year. We have a series of companies that entered Guyana, from Citibank to Hilton. A series of airlines also are considering operating in Guyana, especially Jet Airways and JetBlue. So we're seeing all those. This development in Guyana, but at the same time, the politics of Guyana are still very, very shaky. You mentioned the vote of no confidence that happened December 21st, 2018, and the constitutional obligation normally to have a new elections within 3 to 6 months after this vote of no confidence, and we more than a year after, and that election had not happened. Now, the reason is there's been a series of contestation of this vote of no confidence. President Granger had the majority in Congress, but just one seat, and just out of the blue, one parliamentary member decided to side with the opposition. We later discovered that he had received a large, sizable payment on his personal bank account that is, has been contested as corruption, obviously, by the Granger administration. So all this led to a delay in the organization of the elections. You mentioned very rightly the fact that there's a strong divide in the population between the Indo-Caribbean, which usually and traditionally backed the PPP party of Jack Deo and Ali, which is in the opposition today, while the Afro-Caribbean, which are more usually civil servant, taxi drivers, smaller level jobs in a country, are backing the IFC-APNU coalition of President Granger. A few key important things to point out. Since Granger has been in power, we've seen some clear improvement of corruption in the country. We're still talking about a country which has very high level of corruptions, ranked 24th out of 32 in terms of transparency within the Caribbean nations, and far in the rankings on the global scale, obviously. But there was a real need for cleaning up and limiting the levels of embezzlement and corruption at the highest level of power. And there's obviously a fear from the current administration or companies that have entered the country under the current administration that a return to the PPP might lead to moving back down again on transparency and quality of institutions in the country. the presence, obviously, discovery of oil has completely changed the economic perspective for Guyana, although the key issue is to see whether or not there will be strong local content policies and strong local development thanks to the extraction of oil. And when I was mentioning that Guyana could be the next Qatar, I mean, Qatar has been successful because it actually, led to the building of refineries such as Ras Laffan in the north of the country and other places, and development of the overall economy thanks to hydrocarbons resources. In Guyana, so far, we're not looking at the building of a new refinery. We're looking at limited infrastructure coming out of the coming through the country, obviously because of the specificities of offshore oil. But here's the key challenge, or the key question is, what will be the face of Guyana 5 years from now, depending on who wins the elections in next week, and the way that their ability or focus will be on making sure that the country itself and the population benefits from oil revenues, and not just a select few, and not working on it, continuing the improvement of the transparency of institutions and doing business in the country.
Okay, so we'll get back to the election, but now I'd just like to look at the oil and the infrastructure there. So you've said that it had the potential to change the country's entire economic structure in the past. So what sort of numbers are we looking at? How much in terms of revenue, and how much in terms of oil production? I know that there's a number of large companies that have made discoveries down there.
Well, to give you an idea, I mean, since the discovery of oil, as I say, we've seen foreign investment double in the country. We're talking about a country with population is below 800,000 people, but that is likely to attract around 1.2 or 1.3 billion dollars of in total investment last year. So if you do the ratio, it's a very high level of investment for a small population, and especially a population that has been accustomed to a level of life which are subpar, in a country where infrastructure or the capacity to develop your own industrial or company is actually very, very limited. So it's by Caribbean standard already it was below par, and so we're seeing the potential for economic development being staggering for Guyana. There's been a few criticisms. There's been especially the publication of the Global Witness report a few weeks ago that was challenging the Granger administration, saying that the actual contract with Exxon had been could have been better negotiated with a higher level of revenues in the pocket of the government. In truth, I mean, there's obviously often a lack of transparency in hydrocarbon contracts. Some of those contracts should actually be published. The Exxon contract is actually published. Same thing with the Total contract. But there could be additional contract being presented to the media to showcase the capacity of the government to rightly negotiate revenues on this. But if you actually look in details at this report and what the Granger administration has done, the level of profit that the country of Guyana should receive from Exxon is still within the mean of global practices, and there was a series of different risks to extraction in Guyana, which actually might have explained the fact that it might have deducted a few points in terms of profit sharing on this one. But clearly, the country will benefit for oil extraction. Will not benefit as much as a country where we would have stronger infrastructure. But the Caribbean is known as a region where there's a lot of already existing refineries that are underused. I mean, that's linked to the Petrocaribe policy of Venezuela that had promised oil to a series of different countries, but then was not able to produce under Maduro. So there's existing infrastructure in the region that was underused. So that makes sense not to build yet another refinery, but at the same time you want to make sure that the country actually benefit from it. And this is not so much in questions of the percentage of revenues that the government is going to have for its own budget, although obviously that's important, but it's much more in terms of the quality of the governance and quality of institution, and the policies in place in terms of ensuring that local content is a priority in terms of hiring local workers, but much more than that, making sure that the entire business ecosystem, the burgeoning ecosystem right now in Guyana, starts developing and eventually become, of a size that will legitimate more and more foreign investment in the future. And that requires a well-established and as honest as possible, leading administration, starting with the president and the different ministers, and that's why this election of March 2nd is so important.
Mm-hmm. And of course, when you mention Exxon, you talk about ExxonMobil. They've got plans to produce 120,000 barrels of oil per day when they're up at full production. And so, by the looks of it, what we've seen, has the Granger government shown that it is focused on funneling that revenue back into developing the country's broader infrastructure, or is it mostly focused on attracting more oil money? What are we looking at here?
Well, we're definitely looking at progress over the last decade, and it started already before David Granger came to power, but definitely intensified with the Granger administration. If you just look at for example the Doing Business report from Transparency International, Guyana is ranked number 1 with Greece in the world as a country that made strong progress into strengthening its institutions. I mean, we've been working in Guyana for a certain amount of years now, and talking with a series of prosecutors and different institutions working against money laundering, working against embezzlement, and we've seen them. I mean, obviously the financial means are the ones of the Caribbean nation. We're not talking about American levels of financial means to be able to track corruption, but there were some clear steps taken in trying to limit embezzlement, trying to bring back inside the coffer of the state a series of sectors or contracts that were awarded by the previous administration under shady circumstances, and so those progress have happened. Obviously, when you fight against corruption, the very first consequence in the fact that you have less liquidity in society and the economy, and so there's a perception that Guyana could have potentially grown faster under the current administration, and there's a pauperization in the street because there's less cash in people's hands, let's put it this way, but at the same time, most of those expectations will also link to the expectations from oil production that just happened a few months ago, and the first drop of oil, and so as a result, even if there's been improvement in terms of transparency, even if there's been growth in terms of foreign investment and economic growth of 4.4%, if I'm not wrong, last year, the perception from the average Guyanese inhabitant is that the country hasn't grown as much as it could, and that is the main worry from the Granger administration of a potential return from the PPP administration. There are some good politicians among the PPP. There are also some others that have a series of allegations of embezzlement and corruption, depending on who will be in power if the PPP win the elections next Monday. That will actually tell us a lot about the capacity of the country to strengthen its institution, fight against corruption, and make sure that foreign investment money, mostly in the hydrocarbon sector, but also in other sectors, will actually benefit the population and help to sustainable growth of the country.
Mm-hmm. Okay, and so this will be a hard question, but what does it look like? Who's going to win?
Well, polling is very complex in Guyana. I mean, even when we look at very mature jurisdictions or primary elections in the US or other countries, it's very hard to get a clear perception of who will win an election. Here, both parties are likely to have at least a 40% vote, in the sense that they have a very strong backing in the country, which is usually along ethnic lines, without a risk of conflicts. Most countries that we've been surveying in Africa or in South America and Caribbean, where you have such a strong ethnic divide, you actually always worry at the moment of election of potential civil conflict. That should not be the case in Guyana, and that should be noted, which is quite incredible, because there's this tendency of clearly of the 40% Indo-Caribbean to vote for the PPP and 40% Afro-Caribbean to vote for IFC-EPNU. There are some. It's not that clear, but so there will be clearly two parties that will be up there in the result, compared to any attempts at third parties, which have been the case among the last few months. I don't see any third party be able to win that elections, but obviously it's going to be a narrow win between the PPP and AFC-EPNU. As I said, it's extremely hard to poll in Guyana. A lot of people make up their mind at the last second, which is why, obviously this report from Global Witness, which has done, very good job in the past on conflict diamonds and trying to, clarify and have a better, supplying chain in the diamond sector, has been surprising. They just came out just before these elections with, let's be very honest, when you look at the research itself and the methodology, it's not making clearly a point of what could have been done better, and it's really just having some perspective, just was offering strong backing to a discourse from the PPP that the Granger administration was playing in the hand of Exxon. In truth, we're looking at a country whether in terms of mining, in terms of energy, the existing regulations was fairly weak. Obviously, the presence of a large investor obviously has helped develop regulations, and sometimes regulation that could be in the own interest of the company itself. That happens in every single country. It's a learning curve for a country. Here, if I'm Guyana, I'm actually quite happy that ExxonMobil and other companies, Total, Repsol, Tullow, there's a lot of different companies are actually, which are abiding by, Western international standards, are the one operating a reserve. Could they have done better? We can always, the Granger administration could have obviously done better, like any administration in the world. But clearly there has been some key progress, especially on transparency and quality of institutions over the last 4 years. Mm-hmm. Whether the population of Guyana will actually, favor this and continue voting for AFC-APNU, or whether they will actually put their, unmet expectations, sometimes overblown expectation of immediate profits of oil revenues as their main reason for their vote, and therefore favor the PPP of Jagdeo and Ali. That's something that remains to be seen. So I will not put my money on one party or the other, unfortunately, Scott.
Okay. And so before we move on, just wanted to quickly ask, so this Global Witness report, has it been making a splash in Guyana, or is it a report for people outside of Guyana?
Well, both. Obviously the international community and the oil sector has been very targeted and interested in understanding the methodology behind this study, but it has obviously been used by different actors in Guyana just ahead of elections. So whether the intention from the Global Witness report was for, let's say the international epistemic community of understanding how to do a better job in negotiating a deal with an oil industry, that would be very positive, and that's something that we should have more NGO inclusion and studies and put them in perspective, obviously, and study them. If it was made to favor one party in Guyana, that's troublesome, obviously, and that's at least an indirect consequence and externality of that report, because it has been basically at the center of the latest conversation and debate in Guyana, while issues of overall transparency, issues of social development, of talking with different communities, because Guyana is very complex. We've seen it on a series of mining projects, also with Guyana Gold Strike, with Guyana Goldfield and others. There's a very interesting complexity of the society that needs to be understood and could have been at the center of elections today, and that specific report targeting only the negotiation of one contract, which is extremely important for Guyana, obviously, but has a rippling effect of just focusing any election discussions on this specific report.
Okay, and so for listeners that want more information, we've had a few previous interviews on Guyana. They can be found on the Investing News website. They were done in October, September, and August, so in the lead up to now. So moving on to another report. On February 25, the Fraser Institute released their report on the annual survey of mining companies 2019. So most listeners would already know, but Western Australia is regarded as the top jurisdiction in the world for investment based on the Investment Attractiveness Index. And now the least attractive is Tanzania. They have displaced Venezuela. That may be of interest to a few people given the situation that's happening in Venezuela. So what are your thoughts on the report, Remi? It came out only a few days ago on February 25.
Well, that report made very big headlines, and it should. Fraser Institute has been able to do some quality work on trying to reporting and self-reporting. That's very important to just first of all point out on the different mining jurisdictions, and you don't reach this level of acknowledgement from the mining community if you're not providing a quality information and quality survey and ranking. However, I wanted to put that first before making a few criticism on it. The main headlines have been the fact that Canada doesn't have a province within the top 10, which is the first time in probably forever. So there's this perception that Canada is retrograded in the ranking itself. I'm actually more focusing on up and coming jurisdictions from Southeast Asia, Africa, and Latin America. Obviously, Africa and Latin America most because that's where we operate in all those jurisdictions. And I've looked at a few results that seem to be a little bit of a head scratcher to me. First of all, it's very complex, and that's the ranking is based on province by province or country per country, and we've been adamant about always telling our partners that it's not a question of understanding just a ranking of jurisdictions, but it should be mine site by mine site and in company by company when you're looking at an acquisition or an investment. And that's something obviously this level of detail oriented analysis and ranking is not inside the Fraser Institute report because it's just based on large macro level jurisdiction, and so that's the first problem. And then when you're actually looking at a few results, if I just take a few example, you have at number 20 you have right now Guinea-Conakry, first time that they're actually in the ranking. Guinea-Conakry is a country where there are some big players operating and some very professional players such as Anglo Ashanti, but it has had in its past a series of issues with mining, to say the least, and we had elections literally last week with Alpha Condé, the current president, trying to run for a third term against the international administration advices, with a series of demonstrations in the streets, potential insecurity, potential more than demonstration. We're talking about hundreds of thousands of people that took to the streets a couple of weeks ago, and a question of what should be the place of the mining sector and extractive sector inside the society. So all these for me is a series of maybe not red flag, but at least very dark pink flags, or that would actually should be waved at any investors looking to invest in Guinea-Conakry. And having it seen at number 20, just below British Columbia, and above a series of well-known jurisdictions was kind of head scratcher to me. Although obviously it's just based on just a few, I think it's around 5 to 10 self-reporting studies from Guinea-Conakry themselves. On the other side, you have jurisdictions which I believe are very low and way too low to what they should be. A good example here is Colombia. Colombia is 56 in the ranking. It's way below, for example, Suriname. Personally, I would put Colombia ahead of Suriname. But it's also just at the level of Ecuador. Ecuador, we can understand. There's a series of local votes. There's demands from the communities. There's a very active indigenous/green party with Pachakutik in the southern part of Ecuador. A series of projects that are halted, such as INV metals, potential risk on Cascabel. So there are clear reasons for this worry from international investors. Although, again, I said, if you're actually operating good project in Ecuador, there are some ways to move forward, and there are some very successful projects such as Fruta del Norte and Zamora Chinchipe, which was, especially in that part of the country, one of the countries that was facing potentially the most opposition from indigenous communities on anti-mining movement. So there are ways to move forward in Ecuador. But Colombia is just ahead of Ecuador, just one seat. And when you look at Colombia, and when you look at the explanation why Colombia is at number 56, it's mainly based on the fact that the former governor of Antioquia has planned to ban exploration over 85% of Antioquia. Now, Antioquia is the largest the largest mining jurisdiction in Colombia, so that was very important. But when you look more at the details, obviously that decision from Luis Perez, the governor then of Antioquia, to try to move forward this decision was done just before the local elections. He's no more governor. When he passed this, he had the calendar for voting possibilities in Antioquia. The local government, the local parliament, made it almost impossible for this to be ratified. So it was just an attempt at gathering more support from anti-mining actors, especially in Antioquia, for a potential personal run at the upcoming presidential elections 2 years from now. So my point here is that you're basing this on headlines that when you actually dig a little deeper, you just realize that there are political plays that with that potentiality to be turned into reality. And that suddenly just casts a huge shadow on the jurisdictions that, if you actually know Colombia, there are some risks. There are security risks. There are some projects that sometimes are, not perfectly managed, and I'm thinking about Minesa, I'm thinking about Gran Colombian Gold, other projects that could lead to opposition from communities, absolutely. But you have some projects, B2 Gold, Antioquia Gold, Anglo Gold Ashanti, even Quebradona, Continental Gold with the Arrival Zygian, that shows you that you're able to develop projects sustainably and with strong perspective in Colombia itself. And the actual newly elected administration at the local level, especially in Antioquia with Governor Aníbal Gaviria, are pro-mining. So these signals are, let's say, outdated and based on information and self-reported information and information that are big headlines that you obviously need to scratch further behind. And when you actually have in place the right strategy in terms of intelligence gathering, in terms of understanding, above the ground risks, I mean, obviously that's what we do, so I'm not kind of preaching here. But if you have this, you understand the complexity of those issues and the fact that, judging on a ranking of jurisdiction by jurisdiction without going into the details of understanding the reasons why there has been some headlines, that's obviously leading you to a very poor investment decision. If you actually have the right intelligence monitoring or the kind of information that makes you understand what is the future of a specific jurisdiction, and more importantly of a specific mining project, then that's the way that you will be successful investing in mining, and therefore you have to go beyond the Fraser Institute report, which has its value, but you have to understand its limitations also.
So the Fraser Institute report could be a good starting point for understanding sentiments of companies that operate in those jurisdictions.
Yeah, and it is what it is. I mean, it's a self-reporting report that is based on the jurisdiction level. So obviously, if you have a series of expropriation or real issues with the government, that's the case in Venezuela and Tanzania. That now is apparently, I mean, that's hard to do worse than Venezuela today. But that's so obviously that clearly shows you a negative signal. If you are investing in Western Australia, we all know that Western Australia is obviously not the jurisdiction that is in the most security or community opposition. Although, I mean, we've seen community opposition in Australia developing, especially since IMARC and other summit. So and especially with the Adani project. But yes, that gives you an idea that Western Australia is much better than Tanzania, and more information also if you actually go into details. Yeah. But you have to go much more micro-oriented and specifically at your target for your investment.
And that was Remi Piet, Senior Director at America's Market Intelligence. I'm Scott Tibbles with the Investing News Network. You can find us at investingnews.com and feel free to follow us at Facebook, Twitter, and LinkedIn. Thanks for listening.